The other day I was going through some old files and I stumbled across my life insurance policy. And for a second, I got this wave of, relief. It's like, phew, that's done, family's covered. It feels so solid, right? Like a rock solid promise in a folder. But what if that warm, fuzzy feeling is actually a trap?
It sounds crazy, but it's true. That very feeling of confidence is where the biggest danger is hiding. Because the peace of mind you think you paid for might just be an illusion, setting you up for the worst possible outcome, a denied claim right when your family is at its most vulnerable. So today, we're going to pull back the curtain and look at the fine print they hope you'll never read.
All right, so the first major danger zone is something I'm willing to bet most people have no idea even exists. I always figured, hey, once the policy is active and you're paying your premiums, you're golden, right? Wrong. For the first 2 years, your policy is basically on probation. It's what the industry calls the contestability period. Now, this period is really there to protect insurance companies from straight-up fraud. But here's the thing. It means that for 2 full years, they have a green light to put your original application under a microscope if a claim is filed. Every single detail you provided is fair game, and any little inaccuracy, intentional or not, can come back to bite you. So let's walk through this. The moment your policy is issued, a 2-year clock starts ticking. If a claim happens during that window, boom, an investigation can be launched. They'll dig into everything. But if you make it past that 2-year mark, your policy becomes incontestable. That's the real guarantee, the one you thought you had from day one. So, getting past those first 2 years is huge, but you're not totally out of the woods yet, because every single policy has a list of built-in trapdoors. We call them exclusions, where they just won't pay. Doesn't matter how long you've had the policy or if you've never missed a payment. Probably the most well-known exclusion is the suicide clause, and it really shows you how critical that 2-year window is. If the insured passes away due to suicide within those first 2 years, the company will almost certainly deny the big payout and just refund the premiums. After 2 years, though, the benefit is usually paid in full. And it doesn't stop there. Think about your hobbies. Are you a scuba diver? Do you race cars for fun? Fly a small plane? A lot of policies have exclusions for what they call hazardous activities. If you didn't mention this stuff on your application and something happens while you're doing it, well, that claim is likely toast. It is definitely worth digging up your own policy just to check for these. This brings us to what is, without a doubt, the #1 reason claims get denied. It's a big, scary-sounding term, material misrepresentation. But honestly, it can boil down to a tiny omission or even just an honest mistake you made when you filled out the forms. The key word here is material. Did the information you gave them or failed to give them actually matter? For example, did you say you were a non-smoker but you enjoy cigar on the weekend? Did you kind of fudge your income a little? Did you forget about a visit to a specialist 5 years ago? If the real story would have made the insurance company charge you more or not offer you a policy at all, that's material. And that's all they need to avoid the whole thing.
So when an insurer investigates a claim, it can really only go one of 3 ways. Path number 1, the best case. Everything checks out, claim approved, benefit paid. Path 2, they find a small non-material error, like you got your age wrong by a year. In that case, they might just adjust the payout down a bit. But then there's path 3, the worst case. They find a material misrepresentation. The claim is denied, your family gets nothing but a refund of the premiums you paid. It's a devastating outcome.
So, with all these traps and landmines, how in the world are you supposed to make sure your family is actually protected? Well, this is definitely not a do-it-yourself project. Clicking through a quick online form is one of the riskiest things you can do because you just don't know what you don't know. You need a guide, an expert. This quote really just says it all, doesn't it? A simple online calculator isn't going to ask you if you like to go hang gliding on the weekends. It won't know the specifics of your family's medical history. It can't spot the potential red flags in your application that could blow up years down the road. For that, you absolutely need a specialist who lives and breathes this stuff. In looking into this, we found an expert who specializes in exactly this, in designing policies that are built to last and avoid these pitfalls. His name is Mansour at Muneris Financial Services. If anything we've talked about today is making you a little nervous about your own policy, a specialist like Mansour is the kind of person who can do a proper review. We've put his contact info right here for you.
So I'll just leave you with this final question. Think about that policy. Maybe it's in a file cabinet or a drawer somewhere. Is it just a piece of paper? A promise that you hope will work out when the time comes? Or is it a true assurance? A safety net that you know for a fact is going to be there for your family. Don't leave something that important to chance.